Hey, this is Troy Stavros. Just wanted to talk a little bit about affordability. The U.S. housing market is changing at an unprecedented pace, with home prices shooting up a whopping 44% since March of 2020, and mortgage rates rising from 3% to 8%. We are seeing the fastest ever deterioration in housing affordability. If you're old enough to remember the early 80s, mortgage rates then soared as high as 18%. While that was a rough time, the rapid changes we're experiencing now have left many spinning. I've been in the industry for over 20 years, and now more than ever, I see young professionals who can't afford a median-priced home. Recently, Morgan Stanley confirmed that, saying that housing affordability is plummeting at an all-time rate. Imagine the monthly payment for a median-priced home has increased by 27% year over year. In a recent study, July 2023 was marked as the least affordable month for U.S. housing in this century. So the next few months, once they disseminate the data, are expected to follow suit. Let's take a look at this chart. So in this chart, you see this is the U.S. housing affordability. Shows it's worse now than it was in 2008. This is from the Federal Reserve Bank of Atlanta's National Homeownership Affordability Monitor Index. And you can see in this graph that the 100 mark is basically the level at where we need to look. Above 100 is more affordable. Below 100 is less affordable. As you can see down at the bottom, it says, according to the Atlanta Fed, an index value lower than 100 indicates that the median household income is insufficient to cover the annual costs of owning a median-priced home, meaning the housing cost is greater than 30% of income. And you can see how far we have fallen below that 100 mark with July. This is through July of 2023 coming in at the lowest that it has been, not only on this chart, but for a century as far as affordability goes. So what can change the tide of affordability? There's three levers. There's rising incomes, falling home prices, or lower mortgage rates. Those are the three levers that can change the tide in affordability. And of these, mortgage rates can create a quick impact. Let's take a look at another chart here. This chart shows the drivers of housing affordability, those three things we talked about: income, house price, and mortgage rate. And you can see over the last couple years that affordability has been decimated by both house prices and the mortgage rate component. And this graph shows what each little line is year over year, how it is affecting it. You can see quite a bit. It was affected 2022 into 2023 with the house prices, and it's looking at year over year house prices. But you can see even in the last bar, the mortgage rate component is the biggest factor nationally for killing home affordability. This is showing that the house price component isn't as big a factor. Nationally, it's not, because nationally, year over year prices are not going up very much. But here in East Tennessee, we saw home prices rise by 8% in September compared to a year ago. So we are still seeing pretty healthy year over year home price appreciation here in Knoxville. You can see that in this chart here that was through September. You can see we are at 8.18% increase year over year in the median sales price. So we are up compared to last year, and we are seeing that on a consistent basis. That has not changed, and that is, again, because of the low amount of inventory that we have available. What can improve affordability? We said surge in home construction, combined with rising incomes and declining rates like we saw in the 90s. That was how it happened in the 90s. We saw more home construction happen, and then we saw incomes rise, and we saw rates decline. You could see that here, as well as coming out of 2008, what brought those prices down here. In 2008 crash, we saw 27% fall in the national house prices. But today's circumstances are different than 2008. I know everyone keeps 2008 in their mind because they lived through that and they think that we're going through that again, but you have to always look at what the differences are. Today's circumstances are definitely different. In 2008, the market was saturated with homes. Now our housing inventory is near an all-time low. The risky mortgage products of 2008 are no longer in play. So, will national house prices fall? Experts are split. Groups like CoreLogic and Fannie Mae and Zillow, they don't foresee that happening. They think national house prices will tick higher in 2024. However, Moody's Analytics and Morgan Stanley still believe that a single-digit national house price decline could be possible in 2024. But that's only if factors like inventory and sales align. But what you need to remember, especially here locally, real estate is local. Our market here in East Tennessee could fare quite differently than many other parts of the country. My prediction would be that we fare much better simply because of the inbound migration that we're experiencing and the shortage of homes. You couple that with other factors that make East Tennessee such a desirable place to live, like a strong job market, low unemployment, a diversified economy, and its relative low cost of living compared to other parts of the country, that could spare us from some things that happen in other parts of the country. So housing market is ever evolving, so you need to stay informed and stay prepared and navigate it wisely. And a reminder, talk with someone local about your local real estate market, as oftentimes the national news does not align with what's happening locally. If you have any questions, don't hesitate to reach out to me. I hope you're having a great day, and we will talk to you soon.